So a very common question I get is, what is the difference between an LLC and an S Corp? If you're an aspiring business owner, it's extremely important that you understand the differences between these two things. So in today's video, we're going to be going over every single difference that you need to know. I'll be giving you guys some super helpful resources down below in the description too, if you're interested in getting started with your LLC or with your S Corp. So the main difference between an LLC and an S Corp is that an LLC is a business structure and an S Corp is a tax classification. The two actually tie in with one another because after you form your business as an LLC, you can actually then file to get taxed as an S Corp, which we'll get a lot more into in the later part of this video. So first things first, what is an LLC? An LLC is a hybrid business entity that combines the benefits of a sole proprietorship as well as a corporation. They provide the benefit of pass-through taxation, which basically allows owners to avoid double taxation and just pay income taxes once they're on their personal tax returns. As with anything, there are of course pros and cons of starting an LLC. First, let's start with the advantages. LLCs offer flexibility in management and ownership by having no restrictions on the number and types of owners that they're allowed to have, giving even more power to the owners of the LLC to decide how their business is going to be run. They also have fewer formalities and paperwork requirements than corporations. They're also not subject to double taxation, and they split up financial interests, which ultimately means that the profits are split amongst the members of the end of each fiscal year. Now, some of the cons that do come with running an LLC is the fact that they're subject to self-employment taxes, meaning that owners must pay an additional 15.3% tax that is already applied to 95.35% of their net earnings at the end of each year. So now the question is, what's an S Corp? An S Corp is considered a tax status rather than just a business entity. Both LLCs and corporations have the ability to be taxed as an S Corp, which can save owners a ton of money on their taxes, but that does depend on your overall income level. Some advantages of S corporations are the fact that they offer limited liability protection, especially in the cases of lawsuits or fines against the business. Just like LLCs. They offer additional tax benefits for shareholders, like tax-free dividends, limited liability protection to shareholders, and they even have a much more flexible ownership structure than your basic LLC, mostly due to the fact that there is a board of directors rather than just owners of running a company. Now that we talked about the advantages, let's talk about some of the disadvantages of running an S Corp. With an S Corp, there are more formalities and paperwork requirements compared to an LLC, and considering the fact that if you make a mistake, you could lose your S Corp status in the process. You'll definitely want to conduct proper research and ensure that you're keeping up with extra formalities and paperwork so your S Corp is compliant. There's also the cost to consider when running an S Corp. This can be much higher than just your basic LLC, but we'll dive a little bit more into that in the later part of this video. Now let's get into the main differences between LLCs and S Corps and talk about how they actually differ. Most of these differences are found in things like taxes, management structure, the employment of the owner, startup costs, and the formation itself. Taxes are some of the most important concepts to factor in when comparing an LLC to an S Corp. When it comes to LLCs, they have the option of being taxed as a disregarded entity or a partnership. This, however, depends on if it's a one-member LLC or a multi-member LLC. One-member LLCs taxes are owed by their business as they're paid in part by the income tax return, while multi-member LLCs have their profits and losses passed through to the individual members or owners, who are then, of course, taxed on those. LLCs are subject to a 15.3% self-employment tax as well as a personal income tax. The way to find out how much you will owe at the end of the year is by taking the LLC's gross profits and subtracting the expenses and deductions to get your net profit, which is then the number that you'll ultimately be taxed on. Unfortunately, with LLCs, you are going to be paying that 15.3% self-employment tax on your entire net income. The real key here is figuring out where you're at in your overall business journey and seeing if this is the right choice for you. I'd say if you're making between $40,000 and $50,000 in net profit, then it might make sense for you to either form an S Corp directly or actually use an LLC with an S Corp tax status. I say that for most businesses, this is going to be the ideal method just because it avoids the self-employment tax and on part of the income, and ultimately you'll save a lot more money. Now, one of the cons of having an LLC with an S Corp tax status is that it can be unfavorable for non-active members or business investors. LLCs with an S Corp tax selection allows owners to pay out a reasonable salary. This allows the owners to distribute the profits and losses in more ways, including through wages or salaries, and the rest, of course, ultimately through distributions, which are not subject to self-employment tax. So just to recap all of this, just to make sure you understand clearly, it's very, very important. If you are an LLC and you're making under $40,000 to $50,000 in net profit per year, then it might just make sense for you to keep your LLC status and not go through with electing an S Corp. It of course costs more money to do that, and you'll have to deal with payroll, and you won't save really enough money to make it worthwhile. Now, if your net profit is higher than $40,000 to $50,000, it might make sense for you to actually go with the S Corp option. You'll basically be paying yourself a reasonable salary, which will typically around 1/3 of the net income, but of course that depends on how much money you're making. And then of course the rest is going to be paid out as distributions, and those distributions avoid the 15.3% self-employment tax. So if you do the math, you can save quite a bit of money here. This is going to be the main difference for most people, and it makes sense because saving money is usually the biggest priority when it comes to running a business. Now, one of the important things to consider here is management structure, because that's a big component when comparing these two. The major difference here is that S Corps are managed by a board of directors and are organized as traditional corporations would be, specifically with shareholders, directors, and officers. This is pretty cool because it allows for businesses to essentially run themselves without owners having to be too involved in the everyday activities. Contrary to S Corps, LLCs are managed by the owners or members of the business. There's no need to hold board meetings, so this really comes down to a personal preference of the owner in a lot of cases. Sometimes people may prefer to have more of a removed approach from running the business or maybe even have more of a hands-on approach. Or you might just care about this at all and it's just a little bit more paperwork. But of course, with tax savings, that's going to be the most important thing to consider. Now, when it comes to stocks and shareholders, S Corps issue common stock to their shareholders, while of course LLCs on the other hand have no shareholders or stock for their business. When it comes to S Corps, owners must take a salary. This is basically what allows people to avoid that self-employment tax, and basically they're just kind of employing themselves inside of their S Corp. Now, for LLCs, owners have the option of participating in the management of their organization or not. They can choose either of those options. So now that we have this all kind of together, let's run through a quick example of a situation where it would make sense for you to either form an S Corp or an LLC depending on your situation. Let's say your business makes about $100,000 in net income in just 1 year. With just a normal LLC, you're going to be paying that FICA 15.3% self-employment tax on the whole net income, which is going to be about $100,000 in this case. Plus, there's also the thing to take into account of federal and state income tax. That's quite a bit of money that's going to be taken away from your overall profit. Now, if you have an S Corp or an LLC elected as an S Corp, you're going to be paying yourself a reasonable salary. Basically, you're going to work with your accountant to figure out a number that makes sense, but usually it should be around 1/3 of the net income. So in the case of an S Corp, you're actually going to be employed inside of your own business. Basically, you'll be making a W-2 salary. So out of that $100,000 profit, let's say you decide to pay yourself a reasonable wage of about $35,000 on that W-2. That $35,000 will be subject to that self-employment tax as well as your state and federal taxes, but the remaining $65,000 that's going to be counted as a distribution, you can literally just take the money and transfer it over to your personal account. And on that $65,000, you don't need to pay that 15.3% tax. This is probably the biggest benefit about S Corps, and it's definitely one of the reasons why you should consider it. Now let's talk a little bit about the cost of starting an LLC versus an S Corp. It does vary quite a bit by state, but we can have a somewhat expectation of where this cost will typically be. You can expect to start an LLC at anywhere around $50 to $500 and an S Corp to cost anywhere between $100 to $250. However, of course, the upkeep for an S Corp is going to be a little bit more expensive just due to the payroll and additional forms that you'll have to fill out. Now that we talked a bit about the cost, let me show you guys how to start your LLC or your S Corp for the cheapest price possible. The first thing you guys are going to want to do is head down to the link down in the description below and get started with Tailor Brands. Once you guys click that link, you'll be taken to this page here. And as you can see, you can start your LLC for $0 plus get an extra 35% off their premium compliance packages. All you have to do is choose the state you want to incorporate your LLC in and then hit the claim discount button. Once you've done that, you'll then be asked to give them a quick business name, which you can then check the availability on. After this, Tailor Brands will walk you through step-by-step getting started with your LLC and making sure that you fill out everything so you're compliant. Once again, if you want to get started with your LLC for as cheap as possible, make sure to check out the links down in the description. Hopefully you guys enjoyed this video, and I can't wait to see you guys in a future one.